and invest.
And it's gone.
Hello, Idiot Nation. Welcome back to the Wealthy Idiot Show. I'm your host, AJ. Today, I want to tell you a little bit about my investment journey. I talked a little bit about it last time or in one of my previous videos, but I want to cover it today, kind of give you a quick overview of what got me here. So I made the same rookie mistake I think a lot of people made, and I knew I wasn't supposed to keep my money in cash, but I had no idea what to do after that. So I took everything I had and I stuck it in a mutual fund. And it wasn't very much, it was the small amount I had saved. And I stuck it in a mutual fund and thinking, hey, we got to be good to go, right? I took a look at the websites and I saw the one that had one of the highest returns and thought, what do I got to lose? And then almost immediately I lost a lot of money just watching it drop significantly and got a little scared. So I immediately pulled all my money right back out and kept it for myself and didn't invest my money again for a really long time. I think this is common. I think when I invested, it started in 2007, and almost immediately we had a huge stock market crash. We hit that 2008 recession almost immediately after I put my money in, and that scared me quite a bit. So I took the money right back out. I had lost thousands of dollars, and I thought, what people are lying about investing money. There's no way that that's okay. That to put your money in and then never see it or then lose all of it. So I really stopped for a really long time. When I got my current job, every single time, well, first I decided that I was gonna live way below what my current job paid. So I worked really hard on a budget, tried to find a way to make sure that I stuck to that budget. Followed people like Dave Ramsey, big shout out to him, and made sure that I was able to live within my means. And then after that, every time I got a raise, a bonus of any kind, anything, I I did not increase my spending. So to this day, so it's now been 5 years since I started my new job, and to this day, I have not increased my spending in any way, shape, or form. I take everything I have, and I have been investing it. But to start off with, I had no idea what to do with that money. It just sort of started collecting in the bank, and I knew about inflation. I knew I was losing money just by leaving it, or at least the power of my money was going down just by leaving it in the bank. So I knew I had to do something. So I went back and started researching again to try and figure out what it was I should be doing. Right. So that was nearly, I want to say, about 8 or 9 years after I had tried my initial investment and failed miserably at it. My initial try and failed miserably, and so it took me a while to figure out what to do. I had to first collect the money and then figure out what to do with it. So I wanted to share that with you, let you know that even those of us who are figuring it out now, us idiots are figuring out now that it wasn't a simple journey for us either. That we had to do things in order to make sure, or we had to make mistakes in order to get to where we are today, and learn from those mistakes and try to improve. Right, but I want to share with you guys some interesting information because I do think that investing can be scary. You're putting your money somewhere and you have no idea what's going to happen to it. You're hoping that it's going to succeed. You're putting it in the stock market or whatever, and you want it to succeed. You want to grow your wealth, but you don't know what you're doing, and that's a little bit scary. This chart is the growth and recessions or depressions of the U.S. stock market over the last 100 years. And you can see the spikes when the stock market is doing, or when our markets in general, our economy is doing really well, and then you can see the sharp decline. So at the beginning, you have the Great Depression. You have the spike right before the Great Depression, and then the Great Depression, and slowly it climbs back up over time. Around the 1960s, it starts to get over the peak before the Great Depression happens, and it drops again to a recession in the early 1980s, and it starts to climb again out of that. And then you could see towards the end our 2000 and our 2008 recessions before the stock market comes back. Right. The point of showing this chart is that if you were to even invest at the peak of the or the peak right before the Great Depression and never put any other money in itself, as long as you left your money in long enough, you would see some gain eventually. Now I know that's way beyond, that's way down the road. But if you were to just put in money one time, you would see some gain eventually, right? Because that's how things work. Things grow, things expand. So even when they drop temporarily, things continue to grow and expand. So what lesson can we learn from this? The most important thing we can learn from this is that time is what is needed in any kind of investment in order to ensure that we have some kind of growth over that period, right? So realistically, you wouldn't just invest at the peak. So what I should have done right before the 2008 recession was I shouldn't have put all my money in. I should have put a little bit in, and then I should have waited a little bit, and I should have put in a little bit more, and then waited a little bit and put in a little bit more. And then I should have found a way to get some off my paycheck and put in a little bit every single month. And what would have happened is the average of the amount of when I entered into the market would have slowly started to drop. And then when the market started coming back up, and you can see even on this chart, it didn't take until 2012 to the market to match again. I would have been up already in 2012 because I would have been buying throughout the recession period, and I would have been able to make wealth even before 2012. And then the market keeps climbing, and I would have been making wealth all through that time period. And there's some interesting data. I'm going to link this article in the comment section below. But there's some interesting data. This article is by Pacomi Breton. I'm sorry if I'm butchering that, Pacomi. My bad, man. It's at nutmeg.com, and he points out some interesting statistics over the last about 30 years or so. He says, so looking at the global stock market data between January 1971 and May 2020, if you had randomly picked one day during this period and chosen to invest over that one day, you would have a 52% chance of making gains. So not great, but better than 50%. Almost a similar odd to the toss of a coin. Long-term investing dramatically increases your chances of returns. Just weeks more in the market, and you could make a considerable difference. If you had invested your money over a quarter or 65 days during the same 49-year period, your chances of making a profit increase to 65%, almost a 15% increase. Investing in any 1 year would have generated a positive return of 71%, and 10 years increased your chances to 93%. Interestingly, an investor that invested in the stock market for more than 13 and a half years at any point during this period never lost money. So anybody who put in over 13 and a half years never lost money. The objective here when investing is not to put money in one time and then watch that money grow. The objective is to find a way to consistently put money into an investment and watch that money grow and dip over time. And eventually, you're going to notice that the trend is upwards. You're going to need to put money in for more than 13 years. This is a long-term game. Getting wealthy is a long-term game. It's not a short-term game. You're not going to be 20 years old with a Ferrari unless you invent something really cool or start some business really cool. The idea is, over a long period of time, you can generate a mass amounts of wealth so that you can retire and live happily. All right, I want to let you guys know that I've made mistakes and I'm trying to figure it out as well. And really the key here isn't to try and learn everything there is to know. You don't have to be an expert in the stock market or a hedge fund manager that loses millions in GameStop. We were watching you guys. The secret here is consistency. Find something that you have faith in and consistently put money in there. And then diversify that, right? So I started off with a mutual fund that I should have stayed in. And then now I've gotten into real estate and I should stay in there. It's a long-term game. And then buy into various maybe index funds because they're already diversified by nature. And then keep a small percentage in cash in case something does happen and the stock market drops, and you can immediately go out and buy some stuff and really lower that average. All right. Thanks for stopping by today. Check out the description below. Give us a like and a subscribe. Check out our website. And I've also linked the sources I've used here down below as well, so check that out. And big shout out to our guy, Dave Ramsey, giving us all the information we need to find a way to not spend as much money so we can find ways to invest money. Appreciate you guys. I'll see you next time.